I made it clear then, and I make it clear now, there was absolutely no justification for any bank to raise its interest rates above the increases in the cash rate announced by the Reserve Bank. The Reserve Bank has confirmed on multiple occasions over the past month that since mid-2009, major banks' overall funding costs have moved broadly in line with the cash rate, and the RBA has also confirmed that the big banks' net interest margins are back at pre-crisis levels. That is actually what the RBA has said about the profitability, the net interest margins on the one hand, and the funding costs of our banks. And that brings us to why we're here today. The government has been acutely aware of the impacts of the global financial crisis on the competitive outlook for our banking sector. We've been working on a range of measures over the past 3 years, and we always intended a further range of measures to come forward. You will be familiar with the actions that we've taken this year, targeting unfair mortgage exit fees. You're also familiar with our investment in RMBS, all of which has been put in place methodically in recent years to support our smaller lenders and to keep the superstructure of the competitive basis of our financial system alive. What I'm announcing today is a further range of reforms to strengthen competition, to empower consumers, to support smaller lenders and to secure the flow of finance to our financial institutions. Now, the first stream of those reforms will ensure that consumers have the knowledge and the flexibility they need to find the best deals and to switch to those deals. And our first step here is to ban exit fees outright for new home loans from the 1st of July 2011. To ban exit fees outright for new home loans from the 1st of July 2011. Now, some big banks have already abolished their exit fees in direct response to the reforms that we already have out there. But we'll legislate to ensure that they aren't reintroduced and that exit fees from other banks are banned. Now, if the banks try to rebadge their mortgage exit fees as any other type of fee, ASIC will take them to court if these fees are unconscionable. That's the law for both existing and new home loans. Now, these measures are absolutely critical to ensure customers can walk down the road and get a better deal. At the moment, what happens is that the big banks rely on the fact that they don't think their customers can walk down the road or want to walk down the road. Well, if customers want to make that choice, then they should be able to do it. And that's the importance of this measure, to empower the consumer to take decisions to search for a better deal. Now, in addition to that, we're going to take further steps to boost consumers' flexibility to transfer their deposits and their mortgages by taking important steps to progress the transition towards full account portability. We're going to give this a go. It doesn't exist anywhere else in the world at this point in time, but we think it's worth a go, and we're going to give it a go, which is why we've given the job to Bernie Fraser to scope out all of the difficulties and to tell us whether it's technically feasible, and if it's technically feasible, how is it achievable, and what is the time frame for that. We'll also introduce a mandatory facts sheet which lenders must provide to new home loan customers so consumers can compare different offers side by side. Now, this is actually quite important because if you go and trawl through much of the material that is supplied to a borrower, it's pretty incomprehensible. So what we do want here is a uniform fact sheet that a borrower can put from one financial institution up against one from another financial institution and clearly see what the difference between the two is. A small initiative, but an important initiative to empower the consumer, an important initiative to empower consumers. Also, I'm announcing today that we'll bring in tough new laws to prevent banks from engaging in anti-competitive price signalling. Very important. The ACCC has advised me that they do believe there has been instances in banking of price signalling. In response to that advice, the only responsible thing to do is to move in this direction and give the ACCC the powers that it requires. We've worked with the ACCC on this methodically to avoid creating unintended consequences for other sectors of the economy. Also, we'll fast-track legislation to get a better deal for Australians with credit cards, to give them more control over their borrowing, and of course to stamp out lender practices which overcharge them interest. We'll also launch a national community awareness and education campaign to empower consumers to shop around, and that is also very important. And we'll establish a task force with the Reserve Bank to monitor and enhance the ATM competition reforms already in place, and they have been substantial, and take any further action needed to get the best deal for consumers. And that brings me to the second stream of these reforms. Our second reform stream builds on measures we've already taken to support smaller lenders to compete with the big banks. We'll build a new pillar in our banking system from the competitive power of our credit unions and our building societies. First of all, we'll educate consumers about the safety and competitiveness of mutual lenders by letting more of those lenders call themselves banks, if they wish. We'll also put them right at the centre of our Bank on a Better Deal awareness campaign to promote their competitive role. And we will introduce a new official government-protected deposit seal to help consumers easily identify that mutuals and regional banks are just as safe as the big banks. This is quite important. Many consumers don't understand that our mutuals and our building societies are regulated in the same way as the banks, and that depositor protection applies to them just as it does to the big banks. And it's very important to this sector that that information is clearly understood. And of course today I'm confirming that the financial claims scheme is a permanent feature of our financial system. The decision to introduce the scheme was taken, of course, as I said to you before, well before the crisis, back in June 2008. And of course it was then accelerated in the announcements that we made in October 2008 to deal with the flow-on effects from the collapse of Lehman Brothers in September that year. The deposits it covers are a critical source of funding for our smaller lenders. So this is a vital measure to support banking competition. In addition, we'll invest a further $4 billion in high-quality AAA-rated RMBS to keep supporting this vital funding market, which our smaller lenders rely heavily on to compete by making cheaper home loans. These investments have been assisting the smaller lenders to be much more competitive, and you can see that in what has become almost weekly announcements from those smaller lenders in terms of their issuance of RMBS and their participation in that market with the Australian Government via the AOFM. We're also going to accelerate our work on developing a market for RMBS bullet bonds, which smaller lenders can easily access. This is also another important initiative which will assist our smaller lenders. And indeed, I think it was only last week, the first bullet RMBS issuance by a smaller lender, that is the Bendigo and Adelaide Bank, took place. A very important development in terms of the funding needs of our smaller banks. And Stream 3 is also important because this goes to the very core of our national prosperity, how we develop as a country, and how we fund that development. Stream 3 is all about securing the long-term safety and sustainability of the Australian financial system. The first thing we're going to do here, and it's quite important, is to amend the Banking Act to allow all Australian banks, credit unions and building societies to issue covered bonds. Now, we've been consulting with our financial regulators for some time on this important measure. It will ensure Australian depositors will be fully protected by the Permanent Financial Claims Scheme, And the financial claims scheme, you should note, also allows the government to levy the banking industry so that taxpayers are always protected. But the importance of covered bonds is that it will secure investment from Australian superannuation funds directly into our banking system in a way in which has not really occurred before. It will enable us to enhance investment by Australian savers back into our country for the development of our nation. We'll also launch the trading of Commonwealth Government securities on a securities exchange in Australia as part of our broader agenda to foster